I told you when the Bank of Japan extended its yield curve, or the yield that they would allow its 10-year bond to rise to, that they had to do that because I believe that they were losing control of the bond market there. And I'm going to show you more about this, because really, I remember talking about the yen's lost decade, and then lost 2 decades, and now lost 3 decades. But Japan's buying power, that's the one that matters the most to you and me. The purchasing power is near a 50-year low. It's actually beyond this, because this was back in January of 2022, and it's only gotten worse. And we can see this in the flashback all the way back to the 70s, before they opened up the financialization spigots of the yen. And I'm going to show you that too. But look at this trend. How do you know you have a negative trend? When you have a consistent series of lower and lower highs. This is official, right? Japan's been in deflation for decades. And a while ago, I'm like, okay, well, in deflation and prices, it makes it appear that prices aren't rising. But a wonderful viewer had written in, this is back in 2019, but is totally applicable today. Because I asked, anybody living in Japan, what is your experience with inflation? And this is what he said. Multi-decade resident in Japan here. Do we have inflation? Yes. Foodstuffs show on average 20% either increase in price or decrease in size, or both. This is my personal shopping experience, not government data. That's what matters the most, you guys. Rural real estate remains depressed, urban less so, because even those in rural areas with money to invest put it into urban real estate because there is not growth in rural areas. By the way, government is spending money hand over fist, demolishing buildings to rebuild better and newer. Fine, but where did they get the money for it? Great question. By the time anyone figures it out, it's already gone. I notice a lot more imports from U.S., whether foodstuffs, supplements, etc. Hope this is helpful. It's really helpful, because all we hear is about the deflation. But the yen has lost value against the dollar, even with prices rising faster in the U.S. than in Japan. And we're talking about this is what is happening right now. So even in deflation, the fiat yen or any other fiat currency, whether it's inflation or it's deflation, they're losing purchasing power, because that's by design. And when you get to zero, what do you got to do? You're going to go negative. So the central banks want you to think that negative rates are a choice. Come on. Would you really loan somebody money knowing you're going to get back less unless they're your children? It's the only one I would do it for. Japan has been fighting deflation since the 90s. And all of their experiments are the global blueprint. That's why they are the canary in the coal mine. Because somehow central banks don't get this. Global central banks don't get this. So let's look at the boom, the bubble economy, and when it started to boom was 1984, when they liberalized and internationalized the yen. Woohoo! They had a great 6 years until the collapse of the equity bubble in the 90s. And now it's been a lost 3 decades, and this is the blueprint that global central banks are following. How comfortable do you feel? Because honest to goodness, this is from a real person that's living in Japan. And I appreciate whenever I get that. 97, there was the Asian currency crisis. But that is actually when the first derivative bubble imploded. Long-term capital management. They introduced ZIRP, zero interest rate policy, quantitative easing. Do you see that the Bank of Japan has been experimental and instrumental, and everybody else is trying this because they're out of tools. They don't have anything. And the worst part about it is that they know that it's failed. It's failed for 3 decades. And I've had people say to me, well, that's Japan and look they're still going. Well, the population is really suffering on a lot of levels. But frankly, all of that money printing, everything that they've done, I'll show you, it doesn't work. So I'd say that's more of insanity. We'll talk more about that because it is a failed playbook. You better get yourself into a position to weather this storm. Now, I thought that this was super interesting. And what you're looking at is, 1984, the financial liberalization and internationalization of the yen. And what do we have here? There's your 1980. The stock market peaked in 89. The economy peaked in 90. Hasn't gone back to these levels since then. And real estate prices peaked in 91. Now you tell me how well they've done, because they haven't done all of these policies, all of this money that they put in. Well, it only worked between 1984 and to 1991. Those were the peaks in everything. There's bottoms, 2008, and in 2010, the government and the central bank decided that, wow, we got to support this economy. So how are we going to do that? Well, we're going to buy stocks, we're going to buy ETFs, and we're going to buy bonds because there are not enough buyers to support it. So to the rest of the world, it makes it look like everything is okay. But is it really? That would be a big, fat no. A big, fat no. Nothing that they did worked. What did it get them? But very much in debt. The Bank of Japan started buying the ETFs in 2008. Or 2010 rather, and this lighter orange is all of the ETF holdings, so the stock holdings. And back in 2019, which was the most current chart I could get, or that I found, the Bank of Japan owned 77% of ETFs, in other words, 77% of their stock market. Yeah, that's pretty good. By November 2020, the domestic equities held by the Bank of Japan reached $434 billion, which was the highest ever on record. Who did that support but the wealthy in Japan? And they have a big retirement crisis, just like there is all over the world. And let's take a look at the bonds. Because the red area is the Bank of Japan's bond holdings, and they hold roughly 50%, about half of all government bonds. Do you realize who ultimately pays this price? The citizens pay the price for all of this. The taxpayers pay the price for all of this. Does that mean that everything is hunky-dory because the Bank of Japan had to rush in and support their stock and their bond markets? And they've been doing this garbage and crap and all this alphabet soup of crap since 1990? Oh, it's been real successful, isn't it? And what's it done to the GDP? Flat, flat, flat. It doesn't work, people. All it does is transfer wealth. It doesn't work. And it takes more and more to get less and less results.